Hi, it's Larry Gaines from Options on the Open. We're the leaders in day trading and swing trading using options. In this video I wanted to show you a way to get paid to trade. As you'll see here, this is a chart of Apple. It's a daily chart of Apple, and you can see it's above all the various major moving averages, and you can see these are support and resistance levels, but you can see here we had this island up here. This was the day of earnings. It came out, you gap down here, you've had all this movement down, back up. Now we're back down here to this resistance line, which comes in at about 409.50. And Apple's trying to inch up here and break into this gap. Now if Apple gets into this gap, it's going to be a huge and a quick move up here to fill this gap. So there will be a lot of momentum. So in order to trade this gap, there's a really nice way that you can do this, and you get paid to make this trade. So what you do, this is using a call ratio spread. So when you're not sure of, when you want to reduce your or increase your odds of a good trade and reduce your cost and finance the trade, you do a call ratio spread. And basically it's very simple. You buy one call and then you sell two calls against it to finance. Now what I like to do is look for these type of opportunities, and then you put the trade on using a call ratio spread. And what you do here is on this particular call trade, what I'm going to do is I'm going to buy the 415 call. I'm going to go along this strike right here, 415, and then I'm going to sell the 420 right here. And then I'm going to sell one more call. I'm going to sell the 435, which is way up here. Let me scroll in on that 1 second. Okay, so this is what the trade is going to look like. I'm going to buy a 415 call right here, this strike. And then I'm going to sell the 420 here, so I have a $5 spread. And I'm going to sell one more call. I can't see it because it's up so high, but it's going to be the 435 strike, way up here. So here's the option chain, and I'll show you what you can get. So here's Apple. This is the January monthly. So I'm going to sell the 415, and which is right here, the strike right here, and I'm going to sell it at $7, $6.90 at $7. So let's say I get $7. So I'm going to sell that 415. Not sell it, excuse me. I'm going to buy it. I'm going to buy this at $7. And then I'm going to turn around and I'm going to sell the 420 right here, and I'm going to sell this at I'll say 525 right there. So maybe a nickel off or whatever, but anyway, so I'll buy the 415 at 7. I'll sell the 420 at 525, so I collect the 525, and then I'm going to sell one more call right here, the 435 at $2. So if you take the $7, that's a debit to your account. Then you get a credit to your account of the 420 that you sold. You collect 525. So 7 minus 525. That's $1.75. So your cost on this spread alone is $1.75. That will go out of pocket. So now you've got a $5 spread. So if that gap gets filled and you get up to 420, you've got a $5 spread. So your potential gain on that is your $5 minus your $1.75. So you've got a potential to make $3.25 on a cost of $1.75. Now in order to reduce that and collect money to get paid for this trade, I'm going to sell one more call. I'm going to sell this 435 call. I'm going to collect $2. So when you take all that into consideration, you put out 7, you collect 525, you collect $2. So you collected $7.25. So you brought in a net $25 a contract. So now you can just sit and wait for this trade, and if it works, you can make potentially $3.25, and you get paid to wait. So your cost is you're actually collecting 25 cents. Now worst case scenario, if this thing just keeps flying and goes through the roof, your break even on this becomes 440. So I don't think Apple, between now and the January expiration, which is January 20th, I don't think Apple's going to probably go $40 higher. So I'm willing to take that risk, and I'm getting paid. So just wanted to point this trade out, and this is called a call ratio spread, and it's a nice trade. So if you'd like to learn more about options and option trading and how we use our power cycle trading model for all of our trading, come join us at optionsontheopen.com, and thank you for your time.